Well, hey, everybody, thanks for joining us. We're here to talk about some cyber insurance today. While people come into the room, we'll let people come in. If you want to go over in the chat on the right and tell folks where you're joining from. I'm always curious. In one of the ones we did about what Mike, about a week and a half ago, we had everybody from Australia all the way to Alaska. It was all the A places. It was pretty impressive. I'm in Seattle, and my name is Jake Milstein. I'm the event host, and I run marketing for Critical Insight. And I got to tell you all, I started the day pretty angry. Mike sends out a daily blast of cybersecurity news every day, and reading about these hospitals in Ohio and West Virginia that have been hit by ransomware and have to turn away patients in the middle of a pandemic. Like, I don't know that I get angrier about anything than that. Like, we're in a pandemic. These, I won't say the word, bad people, are hitting hospitals. Like, seriously, to quote my preteen daughter, WTF. Anyway, I started the day angry. And I know a lot of folks here are, work in IT or CIOs, and, you probably get angry about the same stuff. Just background on Critical Insight. So Mike started the company. We protect and defend organizations with critical missions. And that's what we do for a living. We have managed detection response, which means we watch 24/7, 365, and we do professional services, the CISO work, pen tests, assessments, incident response, all that. And that's who we are. So this is not a sales webinar. We're here to talk about insurance. I said who I was, Jake Milstein. Mike, you want to tell folks who you are?
Yes. So they call me the founder, but I'm a co-founder of the company because I was able to convince some really smart people to work for free for a while. So everybody's a founder. I have been a policy advisor to Washington State and the chief information security officer for the city of Seattle and the managing consultant for VeriSign. And now I work for Jake. Basically is doing this all the time.
Brian, you going to introduce yourself?
Thank you. My name is Bryan Hurd. I work for Aon, the international insurance company, their subsidiary, formerly known as Strauss Freeburg. And like Mike, and I've worked with him in some of these, I've had dream jobs as well. The chief of cybercrime for Microsoft, the chief operations for the U.S. watch listing system, and even founded the program for the U.S. Navy at NCIS before it was a TV show. Very honored to be talking to the group today, and for those of you that took time out of your day to be here.
Yep, great. Thanks for being here.
And Brian, I think we've seen you on NCIS, so very familiar with this. All right, so here's what we're going to do today. So Mike's going to go through a short presentation, then we're going to get to Q&A. I think one of the really important things to know, and maybe for the first time ever, is we just got a mountain of questions ahead of time from folks. And so if you have other questions, please put them in the chat on the right. I'll make sure these guys answer them. This goes an hour. If there are questions we don't get answered, you can email them to me and I'll make sure they get answered, or I'll see them in the chat and we'll make sure to answer you separately, because I know this is a very, very hot topic. It actually came up from one of our customers who said, my insurance rates are going crazy. What's going on? Can you guys help? And so one of our responses was to do this. And with that, the floor is yours, Mike.
Okie doke. Ordinarily, I would just kind of fly through a few slides to set the stage here for our panel discussion. But what I would like is for Brian and I to bounce off each other while we just do 3 or 4 slides here. We don't have that many. So here's some news. This is all recent. These are headlines. Like Jake said, I put out a daily IT security news blast. If you get it, you've probably seen all these headlines. There's the Chubb CEO talking about how they have overinsured and they've taken on too much risk. And, AIG reducing limits, the deductibles are going up. What they agree to cover is being reduced. it's just a really unpleasant conversation that a lot of people are having right now. And I know that a lot of organizations just went through their renewal process. And in my capacity as one of our virtual CISOs for a company I'm working with, theirs went up a scary amount. They did say that by virtue of the fact that we sat down with their underwriters and explained very carefully the controls in this organization, their chief risk officer said that they came in about $400,000 less than they had projected. Still a lot more than last year, but less than they had projected. So obviously, this is a really big organization. That is a lot of money for anybody. So let's talk about what insurance does. That was one of the questions that came in. So, your insurance company has a contract with you that essentially says, if you get cybered, you're calling us first. Some of the things that they do, they will deploy an incident response team, people capable of doing forensics. They're incredibly expensive, but they're very good at this. And the idea is they have to find out what happened here. For example, all right, well, maybe your network was locked up with encryption. Did you lose records? It's important to find out. They can help you with public communications. There's going to be all kinds of touches that you need to make if you did lose records. They will bring law enforcement in, which means that during an ongoing investigation, you do not have to make a public statement. And then they are going to assist with this business decision. Do we pay or rebuild? You want to make sure that there's first party and third party coverage, because you may have an impact on a business partner or a downstream associate company, and that needs to be covered. And again, I don't want to, softball the fact that records are in scope here too. Usually it's been ransomware and you're encrypted and you're extorted, but there is also this problem of records theft. And in fact, Colonial Pipeline just had to go publicly fall on their sword to comply with the 50 state data breach reporting statutes to say, yeah, well, our pipeline got locked up and we couldn't deliver fuel, but they also stole all our records. So, that's the kind of knock-on effect. And I do want to point out too that director and officer coverage needs to be there as well, separate from the cyber coverage for negligence. There could be a class action suit following this is becoming more and more common. The equation I have here, I just want to refresh everybody's memory how all of this stuff works. So risk is the product of two terms: the likelihood of a bad thing happening and its impact. And when you identify risk, there are four things you can do with it. You can accept it. Yeah, we know the 71 Ford Pinto blows up. It's cheaper for us to pay off the dead people than to fix the cars. That's accepted risk. You can avoid it. You can remove the condition that created the risk in the first place. You can mitigate it through controls. And after you've done all those, your residual risk, that you transfer with insurance. That's the right way to do it. I think there have been too many companies, too many organizations that said, well, we're just going to load up on insurance and, hope nothing happens. And those days are over. Bryan, do you agree?
Absolutely. Not wearing your seatbelt or not having airbags or disabling them and then expecting insurance or other things like that is absolutely an issue. And if I could add, insurance is a tapestry, and I'm sorry to say that, but it is business interruption coverage for all of the things you're not doing, the contracts that might have been interrupted for your production. There are a lot of different components, and there's an interaction of each of those policies about what is a trigger event, what's covered, which one covers first. It's quite an equation beyond even the standard risk equation. And I want to, handing the mic back to Mike, the qualifications are using the root causes we see, and we'll talk about that, but it is not easy to qualify, and the market is hardening as indicated.
It sure is. And when you talk about, the higher order kind of quantities that they're trying to get at, that one I have at the bottom, ALE, I don't mean IPA by that. I mean annualized loss expectancy. And in the beginning of this kind of feeding at the cyber trough, the way that this insurance was priced was frankly just a finger in the wind. They had no idea what real risk was represented. And then after making a lot of money and the cyber insurance market was growing, then we had the real uptick in ransomware. And a lot of that was against, what I call the most critical organizations, the ones that we serve for the company. This is local governments that make your toilet flush and your water drinkable, and hospitals getting knocked over. It's awful. I've read reports that insurance companies have been penetrated, and or somehow their policy details have been disclosed, and they know how to set the ransom demand right under the threshold of what the insurance company policy will pay. So they know the most parsimonious, the cheapest way for us to get out, the insurance company, is to pay the ransom. So somewhat the situation we're in right now has to do with the business model of insurance. Okay, well, now they're paying out so much, they're losing money. I've read a couple of reports. One said they're at break even. Another one said they're actually upside down on this. So all the premiums are going to go up. Deductibles are going up. The coverage and what they will coverage is coming down. I personally had a conversation with about 20 underwriters that we needed to stack at this company that I'm consulting with. So everything is changing right now. It's changing very quickly, and a lot of folks are finding out about this only because they're sitting down for their to renegotiate their policies.
Absolutely, seeing the same type of thing. I work with clients not only alongside companies like Mike on the cyber smoke jumper side of this equation, or the preps not to have a fire, but I also, because I joined Aon, went and got my insurance license. So I actually sit with our clients from 5-person construction companies to 50,000 plus Fortune 50s, looking at that insurance stack. When they want 50 million, it's 10 million from 5 different insurance companies or more. Mm-hmm. And the first in, first out kind of issues, the qualifications, as Mike's talking about, it is a very protracted process. A lot of companies, Aon included, have actually made the process to qualify for insurance actually give you back a metric report of your security waterfront, your program overview, based on the NIST standard. So you get a benefit. It's a twofer when you go through the insurance process and answer all the questions of, like we're going to talk about MFA and other things. It also gives you peer scores and things like that back. So there's value in the process, even if you ultimately either don't qualify or get insurance or don't get insurance. So there's a lot more value, I think, in that very discussion that Mike and people like he and I help you through for your program. Because, Mike, to preamble and hand it back to you, it's the very insurance standards that, because the insurance industry are the only people with true longitudinal math on this, because we have all the secrets and the prices, that's informing the standards that you're also being inflicted upon. So you're never going to get away from the requirement. You're just going to see it 3 or 4 venues.
Yeah, and you make a good point. And not to jump to the end too soon, but I really believe that what's going to happen, insurance companies are going to be the authoritative arbiter of what the requirements are here. The NIST, cybersecurity framework, that's voluntarily. It's becoming regulatory for certain sectors like water, for example, pipelines and things like that. But insurance companies have the financial dog in the fight. So they're the one. I mean, this is purely market driven, right? You do this, we will insure you. The converse is also true. So meet your new requirements here. And there are, as Bryan says, and he can go through a number of these. I'll just hit a couple of here that have come up in conversations I've had with underwriters and brokers. They are setting the requirements, and this, mitigation takes center stage in the hardening cyber market. Yes. They don't want to see you just buy insurance. If you don't have a smoke alarm, you're not getting fire insurance. That is the way we are going to roll. So be prepared to show your papers. And I thought that was interesting, Bryan, that you will do that for a company and give them a risk rating and assess them against a framework. So if you don't have papers, your insurance company will give them to you.
and it's the 100 some odd questions plus a ransomware addendum we'll talk about. That you fill out basically are looking at all those root cause areas. And then we reflect back, not to the insurance companies, they only get the textual answers, but we actually give the graphs and scores and peer scores. But what it is each of us have a credit score, but none of us know how it's calculated. Like nobody really understands how your credit score is calculated. You might understand how to manipulate it, but you don't know how it's calculated.
Don't get me going on Equifax, man.
Yeah.
If market forces would work for security, Equifax would not exist.
Exactly.
Okay, moving on.
And we actually kind of bring those scores back because we help score the questionnaire and give it back to you for information. And you have the 4 areas, the multi-factor, the vuln management, employee training, and 24/7 monitoring, like Mike and his team do. My team don't do that. So you need somebody with eyes on glass, and nights and weekends or when you're sleeping.
Yep, because bad guys know when you're sleeping.
And they time it specifically for, as a cyber smoke jumper, like many on this call, CISOs or not, Friday afternoon at 5 p.m. or Sunday morning on a 3-day weekend. Now, I have a theory about Friday afternoon. It's when your IR team is cleaning out all the alerts from Tuesday, because by the time I'm finished with the forensics, the incident started on Tuesday. So I'm not sure the adversary times Friday. I think that's people clearing their desks. The other quick list, just to inform this slide, and then Mike, back to you for stage direction, sir, is multi-factor auth, endpoint protection and response, the EDR, the phishing awareness and cyber training as noted, patch management, vuln management, secure VPN and RDP, having an incident response plan and testing it, Active Directory and service accounts, lockdown, least privilege. None of this is new to anybody on the call.
Air gap backups.
Recovery and backups, and email filtering. Those are the 9 root causes of every underwriter on the planet based on the root cause analytics we're doing on all the incidents across all the continents. And that list will only grow larger as the adversary adjusts to a hardening security environment.
And, when I've had my most recent meeting with underwriters, one of them walked away from the table when the company I was working with said, no, we don't do 24/7 monitoring. They just right then walked away from the table, and they said the 2 things we look for are multi-factor authentication as pervasively as possible and eyes on glass 24/7.
Yep.
Man.
MFA is a deal breaker.
Yeah.
And now, again, results may vary. Please consult your local doctor. It's all the caveats that I'm supposed to do because I'm a member of the insurance industry. And one thing I will say is, we mentioned AIG. I have to be, as part of my licensing process, we can't disparage any company, nor would I. All the companies are having, I know you can. All the companies are hardened. The market's hardening because all the companies are now seeing that longitudinal process of the number of claims, the size of the claims and frequency. And it's the law of big numbers that runs the insurance industry. And then it corrects. And that's what you're seeing now is a market correction on either not writing a policy at all, or the price, or the sublimits of coverage. And it's surprisingly complex. I hope you don't have to learn much about it, but that's why you have people like us on this call.
Yeah. Well, and there is an actuarial table right there. This is life expectancy. It's a life table. And, this is the kind of thing where insurance companies have studied this for many, many years. And so they know exactly what risk is represented by a 17-year-old with a driver's license, for example. But we never had 200 years.
The one that shows CISO's life expectancy is less because of the stress of our jobs.
Yeah, but it's so many pages down. It's almost below 0. So this is interesting now that this has been recognized. The fact that there is no such thing as a 200-year-old actuarial table for, cyber penetration and, disruption. So they're considering a Federal Bureau of Cyber Statistics for 2 reasons. Number 1 is to inform the insurance industry so that they know how to price this risk. But number 2 is more visibility so that we understand what trends are happening and we can start to apply our force where it's needed. So this is a little bit in combination with this upcoming requirement to do 24-hour reporting, which private sector is going to shout down. It'll probably be 72-hour reporting, but that's the kind of place where we're going to aggregate those things. Now, if the federal government becomes a reinsurer, remember the federal government has started to talk about ransomware operators when they apply their dirty deeds to critical infrastructure. You're no longer a criminal, you're a terrorist. And so insurance companies have an out there. There is a program called TRIP, the Terrorism Reinsurance Program, and another one called TRIA. If the federal government becomes a reinsurer and we continue to make these ransomware operators scared by calling them terrorists and things like that. And possibly we prohibit ransomware payments because the federal government will be there to pay to put everything back together as that reinsurer. We might get in front of this. I will say that right now we are extremely popular because managed services are filling these gaps, right? Especially the 24/7 eyes on glass thing. So, Bryan, you want to say anything about actuarial table here before we QA? Because I'm seeing a whole bunch of great questions coming in.
Absolutely. What I'll say is a couple of things. Just some of the, and I'll try and do a quick hit list. We can always delve in later. The discussion of the Maersk issue about the Maersk being hit by the
collateral damage.
Yeah, it was collateral damage, and that was a legit cyber act of war. Like, they got hit with a deployed information operations tool, and it wasn't a cyber policy. It was a property policy with silent cyber. So all the things you think you might even know about that case, and all the reporters that talked about it, lots more details than people are willing to say, but it was a $300 million write-down. Yeah. Two, terrorism force majeure. There's often a force majeure clause in almost every contract you've ever signed. However, in cyber, oftentimes that may not be the case. Depends on your broker and how it was placed. So there is a discussion about that. And there's a difference between being on the OFAC list officially and as a funding terrorism, or, you know, FBI's public enemy number one may or may not trigger those things. Consult your broker, consult your attorney. And those are the things where there is potential reinsurance, and there are special terrorism policies. You can actually buy terrorism insurance for places like the World Trade Center and other things. I've been involved in those cases over the years. There's a whole, if you think you are targeted by the Chinese for intellectual property theft or other things where you need special types of insurance beyond the norm, yeah, it exists, and there's a process for it. So if that's an issue, you know, again, let Mike or myself know. We'll figure it out for you. But all is not lost, I guess, is my short version of that.
No, all is not lost. I mean, this is, you know, it's a correction. Like you say, this is going to get worked out, and they're going to flop around for a while, and people are going to, you know, be pretty ticked off about the rates and everything. But ultimately, we're going to emerge from this in a better place. Now, let's go into some QA
right.
here.
So
Jake,
so
you gonna moderate?
yeah, I'm going to moderate. So I have questions from John and Keith and Depty, and a couple people have emailed. One quick housekeeping question. You know, if people want the deck, email me, jake@criticalinsight.com. It's in the chat. And if you registered for this, you'll get an automatic video. If for whatever reason the system doesn't send you the automatic video, email me and I'll get it to you. Okay, so you know, you guys talked about incident response in there, and John has a good question here. In my experience, my cyber insurer is my second call after calling my pre-approved IR team that's on retainer. My insurers have taken hours to get back to me and 48 hours to approve the claim and begin work in the past, whereas my IR team can get to work within 15 to 90 minutes. Is that normal or common, Bryan?
So, yes and yes. So the calls can be in parallel, and again, but you've done the pre-work. You have already vetted with your insurance who the pre-approved vendors are. You've hopefully have their names, phone numbers, and call. You've pre-processed and agreed to all the contracts. Hopefully you talked to your chief financial officer and or the IR firm that you're able to authorize 30 or 50K to get that first 24, 48 hours of response team started. So in your case, I think the hidden story there is you did all the prep work. That's how that works. Picking your Super Bowl team on game day is the way that some people edge into this, and that's where it becomes a nightmare. Negotiating red lines on a contract Friday night or Sunday morning, the lawyers and others may not be available. So definitely walk through that process. But I get those calls in the middle of the night, and there was another question about how do you get people approved. There are processes for these things, but using the vendors that are there is usually a pretty good idea. A lot of great companies, Mandiant, us, CI, and others. There's the good news is you're spoiled for choice, but don't cheap out on your heart surgeon. I've been calling, as Mike has too, 5 days after a breach when another small but plucky firm
that's the point I was going to make,
got over their skis, and now I got to come and clean up a muddled crime scene.
And isn't it true that that can also affect whether or not you're covered, right? If you brought somebody in who's not approved and the insurance company wanted to designate or pre-approve and you didn't do either one of those, and you bring in somebody to go, oh, help me, that could actually invalidate some policy, right?
You may not either be reimbursed for that activity or other things. Again, it's a nuanced discussion, but it's one you really don't want to have because you can pre-do it. And it's a discussion you have months after the incident, because like if your house floods, you're not talking to the insurance company about costs and remuneration until weeks, months later. You're talking to the fireman about whether he'll turn on a hose in the first 90 minutes.
Well, so this actually gets to a question Keith asked, which is, do you see a trend of the insurers creating preferred partner solutions list continuing?
Yes.
And do you expect that adopting a certain approved solution track will be a more common expectation?
So
I think the insurance companies are going to buy companies like ours, and they're going to just have them on staff rather than, designate work with these companies. They will have the staff. That's what I think.
So
That's
I'll agree with Mike on that, and then answer in a kind of a different way is like AIG has its own response team. Aon bought Strauss Freeburg, but again, we often are brought in with two firehouses with Mike's team, or even us and Mandy and her team, for either because the issue is so big or because they want a separation of which vendor does which part because of liability, because of litigation, other things. They will bring in proactive services like advisory and testing. However, the nuance, Jake, I think is they'll have appropriate behaviors, MFA, network segmentation. They'll even potentially have reference architectures. Whether they say use this firewall versus that firewall may come, but that'll be probably 3 or 4 or 5 years off, because you have to collect the data during the incidents to statistically prove which firewall or the update. And
Sure.
a lot of times, even if it was the case, if they get hit with a supply chain attack, like some have been, that would change your math drastically. So I think they'll go with things. And Mike, the analogy you talked about, you have to have sprinklers, fire extinguishers, a fire drill plan. It has to be exercised. They're not going to tell you exactly what sprinklers to buy, but the underwriter's lab will. Right. And other bodies around you will say what are good technologies. But I think we're on that path where chief risk officers and legal counsels will be advising the CISO on a technology approach, if not technologies.
Which is a great outcome, frankly, because information security at its core is a fiduciary responsibility, right? All this cyber nonsense going on. You don't want to lose records. You don't want to be extorted. You don't want to have money stolen, and you don't want to just get knocked down, just disrupted for the sake of being. And all those have a financial impact. Forget the cyber stuff. This is business. And I agree, if not a reporting structure, at least a dotted line advisory, as you say, chief risk officer, legal counsel, chief financial officer, frankly, those are the people that have the real dog in the fight here. So yeah, I think that's a trend that we're going to see more of as well. And it's high time for that. The information security reporting to IT doesn't work. And the
reporting structures always, a lot of times, depend on the company. Sometimes in the manufacturers I deal with, the COO is an engineer, or the CEO might even be an engineer. So you get some interesting things there. I think one of the areas that we're going to see a lot, and this has been the role of the insurance companies. They invented airbags and seatbelts. Car companies didn't want to put those in. They're expensive. Or the steam engines way back in the day. The insurance company brings those behaviors forward. Now, if you're going to deep fat fry a turkey in your own living room and set your house on fire, yeah, you're going to have some discussions about coverage. So, and if you aren't going to have antivirus or multi-factor or network segmentation, then it's like not having fire doors in the hotel you built. It's not going to play well. And it shouldn't, not only for insurance, but for PHI, PII, PCI, or whatever regulatory schemas you fall under.
In fact, I'll bring up another analogy, and this is current right now, right? Insurance companies are starting to discuss the fact that they will not cover you going into the hospital with COVID if you weren't vaccinated, because now this is a preventable disease, is what they're considering this to be. And so insurance companies, again, are the ones that are going to move the needle here by making it financial for people.
Hey, so I want to get to this question from Andy here. He's saying, your attorney should be the one to bring on the forensics team, so all they do is protected by attorney-client privilege. Is that true?
Yes, to a degree.
NDAs have to be signed, before anything starts.
Right, but I mean, does it matter whether your attorney brings them on or whether somebody else brings them on with NDAs and all of that?
Yes, the attorney-client privilege is really critical. Andy brings up a great point. There's a lot of Capital One decisions for those of you who want to geek out about, privilege. Even establishing privilege doesn't mean it'll be withstood. And that's one of the things. But usually the structure is, and this is what CISOs a lot of times don't know. Andy, thanks for bringing it up. The CISO doesn't run the breach. The general counsel engages their outside counsel, who then hires the breach firm. But a lot of times, all of them are pre-approved or figured out quickly on game day, and then get all that in place. And we actually act in theory and practice under the direction of outside counsel and under a privileged engagement. Now, here's some very important things, and to hand it back to you, Jake, but just to cover some waterfront is, when you're doing that, you have to you have to understand not what the underwriters wanted, because now you have insurance, what the claims adjusters are going to look at. Because if you commingle improvements with restoration to the state before the attack or the flood or the fire, you're going to commingle every single invoice, every single hour, and it will be horrid. Do you have the time card codes for what your people did internally to respond to the breach? There's a lot more complexity that some IR firms who aren't inculcated to insurance, like those represented here, don't understand, that really muddy the waters later too.
Keith is making a great point here, right? And this is the story about Capital One, where they were hiring Mandiant to do all kinds of stuff for them. And then they got whacked and they said, okay, we're going to hire Mandiant as an outside firm. And then they said, you have been using these guys all the way along. That's not going to fly. We're going to make this discoverable.
And there's a couple ways. There's IR MSAs, which Mandiant had in place with Capital One, and they were doing two-party agreements. But then there are conditions under those for three-party. Some of the things in that case, and it's a very muddled case, so I don't want to get into the legal analytics. They overshared the report. They should have shared an executive summary that was not a part of the original report. They emailed it out to hundreds of people. Like, there's just all sorts of things that get bubbled up into a news story of 2 paragraphs that us cyber types all read. The nuances and legalities of that, I'll tell you, for another blast from the past, the Target case from 2013, still having litigation findings in, I think,
is that right?
It's a month and a half or 2 ago.
Really?
Wow.
Yep. Wow.
Yeah.
That was the one where they started to accuse the executives of gross negligence because they hadn't resourced security appropriately, and all of the C-suite disappeared and got replaced.
But for Keith and others, yes, a lot of times, absolutely. We can have all that paper ready to go, a tri-party privileged agreement. You can still do 2-party pen testing. Some people are trying to jam every single thing. Mike, interested in your and Jake's opinion on this. If you jam too much into privilege, like all of your assessments, all of your pen tests, you're going to show that privilege is worthless. You can dilute it too.
Well, I mean,
attorney, but you got to be careful about these things.
So I used to run newsrooms, and I can tell you that, if that there are issues in newsrooms where if you do something under attorney-client privilege, but then you share it too widely, that you basically give up the attorney-client privilege. Yeah, you invalidate it. So I assume the same is true here. I do want to so we talked about technology a little bit in there in terms of, MFA and other things. John asks a question here. So that he's seeing requirements from insurance for air-gapped or offline backups. But, what systems get included in that other than servers? Because, O365, SharePoint, OneDrive, Snowflake, and then other things like Imperity, which is it's sort of a marketing system, that they're in the cloud. How do you deal with those?
With contracts. So that's all you can do. They've got their disaster recovery plans in place, and you are privy to look at some kind of attestation for their controls, but you got to go with that. And, I read that question earlier about all these cloud providers that, you can't substantiate that they're backing things up. Well, if an entire Amazon data center fails, it flops over to another one. I think that's a reasonably safe bet, but it is a good point.
There's a couple options. So immutable storage is another option with encryption at rest. Therefore, it can't be overwritten or encrypted or even stolen. So there are, again, I used to work for Microsoft as a caveat, so now I'm going to mention all of the great cloud providers. I was the chief of cybercrime over there, and Mike ran all of Washington. So the issue is there are cloud solutions that do this. Also, when you say to your insurers, look, it's immutable. There's a different set of credentials that if my production credentials are compromised, or we have Iron Mountain or any of the other companies or Google Vault or whatever the hell it is, doesn't matter. Underwriters are willing to have a technical discussion, but it's got to be in the bounds of things they see often. Like I have one client that on their thing, they said, well, do you have 24/7? And the one lone IT guy goes, yeah, they can call me 24/7. I'm like, yeah. That's not what the question meant. So those are the things where it is an acceptable mitigation. And the underwriters are just trying to understand that if you get hit with ransomware in production and everything's encrypted, you can reconstitute your business without paying that ransom.
Yep.
At the end of the day, that's their only question. And if you can, working with, and Parity, their CTO, lives about 2 doors from me here. I'll be talking to him in a little bit. They should be able to show, any company should be able to show you, you're like, yeah, here's what would happen if we were hit or you were hit. You could run a test. Hey, could you pull last week's data? Now, they might ask you to pay a couple hours for that, but it's worth it for peace of mind and your ability to know to your own CEO. Doesn't matter what the insurance company thinks. You're going to be asked the question first and foremost by your own boardroom. You need the answer for that. The rest of us are really afterthoughts at that moment.
And remember, speaking of backups too, having backups, having offline backups, air-gapped backups, off-site backups is not the same as testing your backups. Got to test your ability to restore, and because that's another thing the insurance companies are looking for, evidence that you're actually doing that. Because otherwise, what good are they?
And Mike, you and I have talked about this and laughed about it. Having a backup that's too expensive to restore, we can't restore that, but it'll cost $50,000, so we won't. Then why did you have a backup in the first place?
Exactly.
You can't actually operationalize the recovery.
Right. So here, I'm going to hand you a Windows 10 CD instead. Knock yourself out.
Yeah, you've got mail. Hey, so Wayne brings up a question here, or a point rather, but it's your data and client information being exposed, so you still have to respond to the public. Yeah, I mean, we are talking about this from an insurance standpoint, not necessarily from a, cybersecurity, what you should do. Yeah, I mean, of course, if you get breached, nobody's going to say, the public or whoever your clients are going to talk to you. They're not going to call your insurance company. So, that's absolutely true. So switching a little bit here, so Keith asked, and Keith Wayne says, I was talking about your data in third-party cloud like O365. Yeah, for sure. Keith asks a question that takes us a little off, but I think, it's a great question, which is, all right, do you expect carriers to stop offering payments for ransom itself? And Mike, I know you have a lot of thoughts on this one.
This is not going to be driven by underwriters, carriers. This can only be driven by public policy. It is a business decision whether or not to pay that ransom. And unless there is an outright prohibition, it's going to continue. And insurance companies aren't able to pull that lever, right? Again, the federal government would have to be a reinsurer. There would have to be a prohibition, a national prohibition on paying ransoms, just like OFAC that Bryan was talking about. There are certain countries you cannot send payments to. So if ransomware operators are in those countries and you pay them, you just ran afoul of a federal law. Well, we can make that for this type of payment. And maybe it'll be if it's applicable to critical infrastructure, who knows, where the federal government's got a lot more influence on how things happen. But the other thing is the the anonymity of cryptocurrency transactions are going to have to be addressed. And there's legislation in front of Congress right now to do exactly that. So if those things come together, yes, FedGov can do this, and it will have the effect of making these operators go look for softer targets, right? I would hate to be Sweden in that case. But that is the way to smash this. You have to ruin the business model of the criminals.
I agree with 80 to 90%. The first part I'll say is it doesn't, if your children are kidnapped and the government says we don't pay terrorists, you're going to find a way to pay that terrorist if you have no other way to get your children back. So one of the horrible things, and Mike, I know you know this, I'm just playing for the audience, is it's not a choice to pay a ransom. Therefore, it's not a choice not to pay a ransom. So the choice is, for those who aren't prepared, pay the ransom or go out of business.
Right.
Now, for some of you, it might be, oh, that's annoying, blah, blah. For many companies, it is the end of a 300-person company and 5 generations of that logging, mining, whatever company it is. They cease to exist. They are not paying the ransom by choice. Secondarily, the decision to pay the ransom is as twofold as being talked about. There's the encryption extortion and there's the publication extortion. The encryption extortion is addressed by backups and your ability to reconstitute your business without paying to have it decrypted. If you can get through that, you're right. You're still going to have a public affairs nightmare. Then why pay the ransom to delay it by weeks, months, or a year? You might as well just spend that money. And also, when the adversary, say you have $5 million in cyber coverage and you pay the ransom for $5 million, guess what you don't have? The rest of the money to pay for the firemen, the reconstitution, the people that are going to rebuild your servers, and all of the things you're going to have to do. So yeah, they took the entire, in those cases where they try and shoot for your entire insurance, or 3% of your yearly income seems to be. I've worked and sat in those boardrooms with dark side on the other side of the table, so to speak, with CEOs on their worst week ever talking about a $5, $10, or $20 million ransom. The discussion is, can we get out without paying it? It should be illegal, but it's the same like, hey, don't go get shot today. None of you are allowed to be shot today. And if you're shot, don't go to the hospital because it's not permitted to be shot. The OFAC list is nice, but it's not going to stop people from either being shot or having to go get, to the veterinarian to get medical service. You're going to figure out a way to do it. And if you have a Canadian or whatever subsidiary, you can pay it outside the US. I don't recommend that. Consult your lawyer, but you'll find a way to keep your business alive. We need to find, fix, and finish these people. We need to go through and follow the money and the Bitcoin accounts and things like that. And we need to take them from the safe havens they live in. And I used to do that in my old days. We gave them free travel to The Hague for a tribunal or to the US for a trial, cyber or terrorism or otherwise. We do need to bring whole of government. But we can't just say, don't be a victim of extortion. It doesn't.
Well, but that's why this federal reinsurer is here, right? The federal government will always be there to make sure that they can fund. That's what the Recovery and Restoration Fund is for, that the Secretary of Homeland Security asked for to be in the infrastructure bill. That's what that's for. But that is going to be for critical infrastructure operators and does not come with a prohibition on paying ransom. And what I'm saying is the federal government was always going to be there with the money that you need to put your business back so you don't lose your 300-person, construction business. Then they can start to do that. But you made the key point, Bryan. The only way this stops is if we snatch a couple of these characters and we flay them on live TV. That's going to send the message that it is going to be the kind of deterrent that we need. Yes.
Because I'm here
great,
justice with the rule of law.
great, Mike. I told you to stop saying public hangings, and you've gone to flaying.
Okay.
One other
requirement.
You did. Yes. Now we can insure you. One of the one of the things that the FBI said, and our friend John Ricci, who runs cybersecurity over at the American Hospital Association, said at one point, is one of the problems with saying that nobody can pay ransom is, Bryan, to your point, people will still pay ransom, and then there will be another ransom that's blackmail that says, hey, you did something illegal. We know we're going to tell people if you don't pay us not to tell people.
There is, except most of the people on this call, if you're not in a highly regulated industry, you're probably in a partially regulated industry. You're not going to be able to do that. If you're a public company, there's the CISO will go to jail if you try and pay off the researchers, like that case. Not to pick on the CISO or the company. So to a degree, the great news is if you're really sitting there with a board of directors and it's not just like a mom and pop organization, and even if it was, the FBI is, as they never have in the past, if you pay to get your child back, the Department of Justice isn't going to then come and do things to you. Again, consult your lawyer, but still, I used to work on that side. So those are core discussions you need to have in that executive tabletop way before your house is on fire. Talk about the fire drill. Talk about where the core data is and is it backed up. And the issue about that is all the preparation to have your backups and be able to understand what your PR plan is as part of IR will avoid that discussion because you have a plan for how to tell everybody you had a fire. And then you just get on with it because you honestly, for a couple of reasons, if you don't have to pay the ransom for the survival of your company, spend that money elsewhere, spend that time elsewhere. Or try and avoid the whole damn flood in the first place or fire. Those are the things we all as a team should be focused on. You know, birds of a feather of CISOs and the ISACs getting together. Mike, you and I have personally sat with senators talking about this during their visits to our state, that we think this is a clear and present danger. Yeah, go put tomahawks on warheads on foreheads and bullets and bad guys, if that's approved by the president, even in cyber, or bring them to justice. But, you know, companies just have to have a plan and be ready to gut through this or avoid getting extorted in the first place. And have the right teams, outside counsel, IR vendors, approved, all the paperwork in place, run tests.
And I will also add to that, you know, and you mentioned there a PR plan ahead of time.
Yeah.
You know, I can't tell you how many times, you know, running newsrooms, you know, something, you know, a ransomware would hit an organization or they'd have some sort of data breach and they wouldn't answer calls and be quiet for 4 or 5 days, which just means that the story just festers and is out there and there's no answer for people. So, yes.
Jake, you're 100% right. There are also PR vendors and notification vendors on those approved lists from your insurance company. Like when the pipeline, I hadn't read that article, but when you have to inform 50 states, it's not like one person informs 50 states. There's different rules in each. You get a notification vendor that does that. And hopefully, if you've worked everything out, that's covered by your insurance. The other thing is, Jake, you're right. And the term I've heard in the Navy, and I'm sure this is old school for both of you, is tempest in a teapot. If you get everything out at once and you're honest and transparent, it will be one news cycle and everybody will have a problem.
Yep.
You try and hide it and you will be a front page discussion for years to come.
Hello, Scripps Hospital.
Not going to pick on any logos, but
no, I am.
I'm glad that both of you know your roles on who gets to pick on people.
In fact, I'll give an example of one that did it right, and that was Kaseya. Right? They were every day. It was like, here's the update, right? Here's when we expect we're going to be back to full capacity. Here's what we're doing for our customers. We're trying to derive this key to get out to everybody. They were perfect.
So I want
both Mandy and others in SolarWinds tried to handle it well. Microsoft with the O365. I think we're seeing a lot of companies for supply chain issues have that. The other companies, I'll tell you, when I'm sitting in a boardroom, all the technology goes away. And it's just one question to the founders to play to Mike. What kind of company are you and how do you want to deal with this crisis? And it's the Johnson & Johnson moment from the Tylenol scandal or the poisoning. And I actually use that analogy and walk them through it. What is your ethics? And now we'll figure out how to respond to your crisis with PR, with technology, with whatever.
Yeah. Yeah. I want to, so I'm looking back through the chat and looking back through questions and looking for things that I don't think we've quite hit on yet. If there is something you don't think we've hit on yet, put it in the chat and I will make sure to ask it. This one, I don't think we've quite gotten to. Do insurance companies have a clear document as to what disqualifying events are for cyber insurance?
I will say that, I'll say that they have a very clear set of questionnaires and process to qualify for insurance. And there are absolute deal breakers, the 9 areas we've listed, and those will be during the broking and discussion processes. The other things like acts of errors and omissions, like that one patch didn't get installed, but 99% of the time you do, that's different than you have no program to install patches and you got hit by something. So I have not seen, in my personal experience, the claims of the things I've been involved in for the last 3 years in the industry be denied because of causality that wasn't highlighted during the broking process. That's what that process is for. It's due diligence to issue that. But I also haven't seen something so egregious as like pulling a big vat of oil into your living room and trying to deep fat fry a turkey on it and setting the house ablaze.
Yeah, so it is possible.
It is possible, but like everybody throws, again, back to that mayor's thing. Oh, that happened. That was a property policy. That was silent cyber. It's a whole different thing. So gross negligence or other acts of criminality may be an issue, but I have not seen them trying to get out of coverage because of the normal course of business. There always are going to be cases, but I haven't seen them, or I haven't heard a lot about that. I have seen the tightening requirements for everything, not only for insurance, but for, if you're a supplier, somebody wants to, you're getting that same questionnaire and those same root causes from that.
Everybody got to show your papers now.
Yeah, and we're trying to normalize across all those. So you get like write once, use many, but that's always been a problem for 30 years in the industry of having the BS 7799 NSAIM standard.
Ooh, that goes way back. Wow.
Yeah, exactly.
Hey, and so Keith says, what tips do you have regarding creating an addendum of explanation to include with your cyber application instead of hoping that your yes/no answers are interpreted correctly?
Yeah, that's always bring in this concept of compensating controls, right? We don't have a firewall, but we have a person with a machine gun. Right. I mean, there's always something you can do, right? You can invoke things like the shared responsibility model with Amazon, right? That is a compensating control. You don't have anything to do with it, but they are doing their side of that. The fact that you may have some missing patches on some servers, but there's a segmented network and that segment is firewalled off, right? So those compensating controls, and that's the language to use. That was originally, I think, Brian, didn't that come from PCI? Where they gave you the opportunity to have compensating controls if you didn't meet the letter of the law?
And also, I think, and depending on who you're talking to and which application process you're using, they moved away a lot from yes and no's to like A, B, C, D, which are like 1, 2, 3, 4, 5. Like, how good are you at this? We have it on some.
That is so aspirational.
It is, but here's the thing. And then there's always a comment section. Now, if you're spending a huge amount of time in the comment section, you probably should spend the money and just be better to answer one of the 4 above, so just as a general rule. But that's what the brokering process is having that. And that's why we've put it into this whole thing that gives you that scores back and helps you have that understanding. They're going to rank you a 2.5 and you should be a 3. Your credit score is too low, but you might want to spend your next best dollar doing these 3 things. Whether you hire us or Mike, or it doesn't matter who you hire, the insurance companies don't care about that. Even when they have their own vendors, I want to be very clear that even AIG doesn't care if you use or Aon, if you use their own IR or pen testing people, they care that you have a good one done. There are a lot of amazing companies here in Seattle. Some of you are on the call, or I'll be talking to you later.
I see.
So yeah, it shouldn't be yes, no's. And if it is, I'd be shocked about what your policy looks like, or what, as Mike said, the sublimit for ransom payments. You might get $1 million of coverage for a ransom and $4 million coverage for IR. And don't think about this just adversary. Bad levers, fire, flood, they have cyber impacts. Make sure your trigger events and everything are aligned.
Hey, and somebody just emailed in this question, and they said, all right, our cyber insurance premiums just went up astronomically. We've gone back and we've said, okay, what services can we buy to bring it down. We just can't afford this. And it might be more economical to get 24/7 eyes on glass. It might be more economical to, implement a whole bunch of things, but they're not answering. They're just, this is what we're gonna charge you. How do you answer that, Bryan?
So I'll answer it in two ways. Is one, if you don't get insurance, you're what we call self-insured. You have insurance, it's just your own bank account.
Mm-hmm.
So whether you get insurance or not, somebody's holding this bag, and it might be you. And if for some reason insurance is too expensive this year, or they say you don't qualify, spend some of, if not most of the money you would pay in a premium on those improvements, because guess what? You're the insurance company. You want the things they complained about more than the insurance company does. So it's actually reverse. When you get denied insurance, you need to double down and get those controls in place.
I mean, should people just go to a different insurance company, maybe a more reasonable one that will listen?
And that's where I will do the 10-second thing. Aon's a broker. We're a fiduciary to our clients, and we rep them to we rep to 100 different insurance companies and markets, as do many others in the field. I have to say that crap.
Marsh,
so there's a difference between going to an insurance company and talking to an insurer who works for them and having a broker on your side. That's a completely different experience.
All right. We are almost up on time. We do have one more question in there. Mike, did you want to say something?
I do. It's because James is asking about.
I know. I'm going to get to that. I want to tell people a couple of things first. Number one, there's a survey. Please take the survey. And
malware.
This is. I always recognize the deep irony of offering a bunch of skeptical IT CIO CISO type a link, but hey, trust me, which is the same thing a bad guy would say. But we really do appreciate when folks take the survey. A couple of things. Number one, we love the feedback. It makes us better. Number two, there's a place in there where, if you want to contact us, it's in there. And three is you can either get a gift card for taking the survey, or you can donate your gift card to a food bank. So please take the survey. We'd really appreciate it. Second is, quick marketing moment here. This is what Critical Insight does. We can help you with your IR plan. We can help you develop it. We can help you. I do answer the 800 number. So if you call and you're having a bad day, you'll get me and I will help you. I'll get you to the right people. Marketing doesn't actually do our IR, which is good. We have smarter people than me. We do managed detection response, and we do assessments and penetration testing. And there's my marketing moment, except to say the other thing that Mike and team have been working on is what are called 13-point assessments, which is just a 1-hour assessment. Sort of gives you a sense of where you are. It's not a full assessment. We have a couple of spots left this month after our last webinar. A bunch of them filled up. If you're interested in one of those, shoot me an email, jake@criticalinsight.com, and I'll get you set up. And that's it for your marketing moment. My email address is there. Mike's is there. If you want to get in touch with Bryan, shoot me an email and I'll get him involved, or you can say it in the survey. All right, Mike.
LinkedIn as well. I often publish a lot of stuff there. I use it professionally, so that's another option as well. But I'll put my email in the chat.
Perfect. And now, Mike, you want to answer James's question. What's your stance on it? I'm going to read it so people don't see it. What's your stance on insurance providers conducting unauthorized scans against organizations to inform their risk and/or avenues of recourse?
I don't think there's anything you can do about that. Because the internet, if you have a public facing exposure, you're getting scanned all the time. The fact that your insurance company may use it to better inform themselves about your risk is a good thing, frankly. And if they're informing you about things that they find and you get those fixed quickly, that's going to reflect really well on you. So, there's a school of thought that says, well, that goes afoul of the Computer Fraud and Abuse Act, stuff like that. It doesn't. Everybody's scanning everybody on the internet. Shodan knows everything about you. Having your insurance company not do it is a bad thing. And
Jacob in the chat says the bad guys are going to be scanning too.
The other thing I'll say is just one word in there was unauthorized. A lot of times, if the insurance company is going through a process with you, you're going to sign forms that authorize.
Yeah, it's contractual, right?
Or they're going to buy. Here's the thing: they may be informed by threat intel vendors like Shodan and all the others, with that scanned you unrelated to that transaction, and they're getting the outputs. your reputational services, like the cyber credit score, to go back to Mike's Experian thing, or Equifax. So those things will happen. The issue is, a lot of times, if your entire business is not on the web, it really doesn't talk about what your fire doors and smoke detectors look like. So it is informative at best of a part of the discussion. So
yeah, it's surface scratching. It's not a lot.
So, yeah.
All right.
And scanning your perimeter doesn't say that you background your employees, right?
Yeah.
Yeah, and James says ours was prior to engagement for all the folks who said you signed that away. So maybe they didn't. So
everything. I don't mean to argue the point. That's horrible. That shouldn't really happen.
So anyway, all right, everybody. Well, thank you so much for joining us. We are at time. If you have other questions, shoot me an email. I see a bunch of people asked me for the deck. Either I'll reach out to you, or Madison, who's on my team, will reach out to you with the deck. Mike, thank you. Brian, thanks so much for joining us. And everybody, thanks for asking so many good questions. I think this one had more questions than any other webinar we've ever done. So thank you so much. Michael, you said, please send me the deck. Email me and I'll get it over to you. And thanks, everybody. Have an awesome day. Bye-bye.
See you, Brian.
So.